According to preliminary statistics released by Qatar's Planning and Statistics Authority, real GDP growth was a robust 8.0% year-over-year in the fourth quarter of 2022 and reached 2.7% when compared to revised Q3 2022 projections, quarter-over-quarter. According to preliminary figures released by the Planning and Statistics Authority, Qatar's real GDP grew by an impressive 8.0% year-over-year in the fourth quarter of 2022. This is in line with our expectations and supported by strong services sector activity during the FIFA World Cup hosting in November and December. In the near future, S&P Global Market Intelligence anticipates that real economic growth would decrease due to lower global demand, more restrictive financial conditions, and adverse base effects from the World Cup's hosting in the fourth quarter. Real GDP growth in 2022 will be close to 4.8%, which will be the highest level since the middle of the previous decade thanks to strong Q4 economic activity. The robust real economic performance of Qatar in Q4 2022 is consistent with what we predicted. S&P Global Market Intelligence projected real GDP growth of 7.8% year-over-year for the fourth quarter of 2022 and 4.7% for the entire year. Expectations for 2023-24. Since weaker global demand, higher local interest rates, and less favorable Q4 base effects weigh on real GDP growth performances, we continue to anticipate slower real GDP expansion throughout 2023. In 2023, we anticipate real GDP to expand by 2.8%, and in 2024, it will grow by a little higher 3.4%. Since March 2022, the Qatar Central Bank has been hiking its key policy rates in step with its U.S. counterpart because of the long-standing currency peg to the U.S. dollar. We anticipate the U.S. Federal Reserve to boost interest rates by at least one more time, with additional rises probable until there are indications of genuine weakness elsewhere. Therefore, it's likely that this tightening cycle's most recent interest rate increase from Qatar's central bank is not the last. To assist ease Qatar's inflationary pressures, we predict declining annual global commodity prices, lessening worries about disruptions to the global supply chain, and increasing borrowing costs. According to our forecast, the average annual inflation rate would drop from a peak of 5.0% in 2022 to 4.0% in 2023 and then 3.0% in 2024. We anticipate that moderated global energy prices will result in GDP that is closer to the mid-single digits in 2023-2024, compared to 10% in 2022, and lower but still healthy fiscal surpluses. The government will be able to pay back some of its foreign currency debt stock thanks to increased foreign currency profits creation and comfortable fiscal surpluses, which will result in even more moderate sovereign debt to GDP ratios in the near future. Thank you. Please subscribe to Risk and Research. Thanks for watching.